Supermicro computer just delivered 123% growth. Let me repeat that, 123%, which is a record quarter for the company. But why are investors so nervous? Is this the AI infrastructure king finally gearing up for a 2x move? Or is this a margin time bomb waiting to explode? If you're holding SMCI or thinking about buying this dip, you need to watch this entire breakdown. Before we jump in, hit the like button for the algorithm and subscribe if you want more analysis about AI stocks. And let's get into it. Now let's talk about the breakout quarter. On February 3rd, SMCI reported $12.7 billion in revenue versus the $10.4 billion expected. They saw 123% year-over-year growth, and the net income was up 25%. The company also raised full-year guidance to $40 billion for revenue. That is not normal growth. It is powered by the AI supercycle, and the main theme driving it is going to be liquid cooling. Now, we all know the liquid cooling dominance, as Supermicro is aggressively scaling production of liquid-cooled AI racks, targeting around 6,000 units per month this fiscal year. You may be asking yourself, why does this matter? Well, it's because AI chips are getting hotter and denser, which brings us to the real catalyst. NVIDIA is launching its next-gen Vera Rubin GPU platform in late 2026, and SMCI is already shipping compatible rack-scale system. That means that when the hyperscalers upgrade, SMCI is one of the first in line to capture that capex wave, and that's why bulls like Rosenblatt have a $55 price target on the company from the current levels of $30. That's nearly an 80% upside scenario. But we still need to talk about a problem that's going on within the company, and that's going to be the margin compressions. Gross margins dropped from 11.9% last year to 6.4% this quarter, and that is a massive compression. The reason to this is because it was a higher scale up cost. As well, they're serving lower margin hyperscaler customers, and there was an aggressive pricing in a competitive AI arms race. Revenue did explode, but the profitability efficiency dropped in the company, and Wall Street, as we know, does not like declining margins. That's why Goldman Sachs has a $27 price target and is sell rating on the company. They're basically saying there's a cool growth story here, but when did the margins recover? That is ultimately the million-dollar question that all of us want to know. Now, if you look at the forward guidance for Q3, the revenue expected is at least $12.3 billion and EPS of at least 60 cents. If they hit close to those numbers and the margins stabilize even slightly, this stock could re-rate quickly. But if the margins compress further, we could revisit the 52-week low. So now that we transition from the overall news, let's move on toward the daily chart to analyze SMCI's price action. So here we are on this daily chart of SMCI, and if you look at the company, right now it's trading at $30 per share, right? And the sellers have been in heavy control in this name ever since we initiated selling position at $1,000. Now, the sellers initiated their positions at this exact moment here on SMCI. And the reasoning as to why I believe this name can actually increase and short squeeze is because of the following sellers that have been adding into the position a lot of times, highlighted here. So the first instance was here on the pullback towards July of 2024, which initiated this heavy downside. Then we saw a rally from the lows all the way towards the resistance level again, the swing high anchored VWAP, and guess what? We found sellers again at that exact level right here. Boom, to the downside. Now the next rally, we saw an upside move and then sellers again, right? And then again. So the most recent one was here on October of 2025. So what I want to do in that case is plot an anchored VWAP again from that point, which I already did. And that's going to be the new instance or the overall momentum that's going to be continued and that we have to factor in, especially on this name here, SMCI. So if I zoom in a little bit closer, the resistance levels that I believe SMCI will encounter if it does rally is going to be first, the $40 level. And the reasoning as to this is because there are lots of levels that are forming confluence here on SMCI. So first of all, we have the swing high anchored VWAP, right? That's the first level of resistance that's forming there. Second, we have the swing low anchored VWAP, right? So we kind of measured the buyers that came in at the low because, buyers came in, right? We had, if you look at the RSI, it was at extreme lows of around 27. So overall, like we said, right, buyers came in here, and that's where we factored in the swing low anchored VWAP, this overall green line that you see, and we're also below that. And look how it's forming the exact level confluence with that level. Now, the third and final level that's kind of telling me that that's going to be the first level of resistance here on SMCI is if we use this fixed range volume profile, which pretty much we can use to drag from the high towards the current price action, and look where the point of control is here. If I can just highlight it a little bit better, so probably you can put the point of control here as, let's say, black, so you guys can see it. There it is, right? And look where it's at, exactly at this $41 level. So we have heavy, very heavy resistance that's forming exactly at this general zone here. And that's why I believe that, if we do see a rally of SMCI, that is where we're going to be finding, resistance, and could be a good shorting opportunity. If you want to, short this name initially, probably do something like that, trick the sellers, and then they start with their positions like that. And we slowly start to see those lower highs and lower lows filtering into the name as the overall sellers add heavy. We'll probably see the anchored VWAP do something like this, like that, right? And then it slowly starts to decline, etc. And that would be another instance of the prior ones that we have previously stated, exactly like here and here. Now, if the company can break above the levels of resistance that I said, then I believe the stock can go towards $52. And if we look at the current price, that would be a very nice return of around 69%. So you could go long, let's say, at the break above of this overall resistance. So we'll factor in for simplicity. We'll just look at the overall, swing high here, the last instance of, heavy supply that was added. So if we see something like this, right, obviously over time, see something like this, maybe have it, obviously a green candle, and then we see a decided break, right? From there, we would probably see the candles do the following, and then they probably pull back towards the VWAP again, testing it, and then we would see like this, a continued upside, higher highs, and then higher low formation, with the RSI finally, being the overall here tested. And that would allow, for the, sellers to be found and located exactly at this general zone. And, during this transition, if you're long 37 to 52, that's a very nice return and can be, exemplified with options here on SMCI. As well, I really want to acknowledge and note that the current RSI levels on SMCI are around 50, which indicates to me that's going to be a possible transition of the overall trend, because generally when we are, either at above the 70 range, that's when the sellers come in, right? In general, that's when we get overextended towards the upside. We fall below here, same thing here, extended towards the downside, and we see a bounce generally. And that is what we've been, kind of doing. We've been kind of finding a nice area of support exactly here, right? This general $28 zone has been holding, and if we zoom out, that was a prior level here on April 7th, the tariff low. So this is why I believe that we could double bottom precisely at this level, and like I said, achieve the, levels that I said of around 37. But also we have to consider the bearish thesis, right? What if the sellers are too aggressive, and let's say that SMCI reports their next earnings and there's margin compression or negative sentiment around the stock? Well, simply what we will see is going to be the following. So we probably see a rally, right? And then when the buyers think that they had enough, the sellers will come in and then will decline right here, just like that. We'll see that another instance of the resistance, and then we'll possibly go towards lower levels, towards here of $25, and lower support zones possibly towards 17. Now, this is the bearish thesis, the bearish case. That is only if SMCI reports negatively, or there is negative expectations that could alter the short-term price action and lead the stock towards these very low levels here of $17 and $25 here. But overall, I believe SMCI can rally, and during that time we could see even further upside on SMCI. This is a short squeeze. Overall, here's the bottom line. SMCI just posted 123% revenue growth and showing that the demand is real. But with the margins collapsing and with one customer driving over 60% of the revenue, that at the same time is a real risk for the company. But if the margins stabilize and the NVIDIA Rubin cycle delivers, $30 could look like a steal. But if not, the volatility isn't done. So which side are you on? Let me know down in the comment sections below. Remember to subscribe to the channel, give this video a like, and remember, don't let the markets wipe you guys out. I'll see you guys on the next one.